Nice to see everyone, even though we can't see anyone, the light's blinding us. But I'm excited here to have Ankur from Bilt, CEO of Bilt. This is a company, it's a client of ours, so selfish promotion. But we just helped them raise a couple $100 million at 3.1 billion, oversubscribed, more coming in. Yeah, who knows? But this is a company that I didn't know about 3 years ago. We met you guys not that long ago. And you've gone from launching the company less than 2 years ago to 200 million in annualized revenue, and you're profitable. If I was like type that into ChatGPT, find me companies in Fintech that didn't have any revenue 2 years ago, 200 million today, and are profitable.
Yeah.
I find nobody but you guys.
Leave it to Steve to talk numbers.
There you go. No NDAs. Yeah.
Well, first of all, there's some people out there. Let's get everybody in here. I can kind of see this is very fun. Thank you for indulging me on the last session before cocktails. How many people here know what Bilt is? We'll start there. Okay.
There you go.
So let's start with the basics.
What is Bilt, for those who don't know?
How many people have paid rent? Now I know everyone's lying. Everyone here's paid rent. Rent is the single biggest expense in this country for most people. And up until recently, you haven't been able to get anything back for paying your rent every month. People are spending 30, 40% of their income on one single expense, and you earn no rewards. It does nothing to build your credit, and you get no closer to home ownership. Think about that. Year after year, Americans pay their rent, and when by the time they're, say, 30, they have nothing to show for it on their credit report, and you've gotten no closer to home ownership. In any market, when you see prices going up and what you get back going down, something is broken. And I think that's what's so exciting. As entrepreneurs, everybody who's here, people that we met backstage, you have a chance to solve real problems. And so, now that we're past this casino capitalism phase of crypto, we get to focus on real issues. And you look at housing prices, you look at student loans, you look at the cost of healthcare financing. There are real trillion-dollar opportunities for us to try to rethink the model, because when you buy a $3,000 Apple MacBook, you feel good about that. When you pay rent, you feel shitty, right? And so how can we?
But you saw this problem. People are paying rent; they feel shitty. Like you don't get any. But how did you then turn that into a business model, right? How do you get these renters? How did it all happen?
So there was an eye-opening dinner that I had with a good friend, Barry Sternlicht, who started Starwood Hotels back in the day. I did not know this, and this group may be way smarter than I was when I looked at this thing. I had no idea that airlines and hotels lose money flying planes and make all their money on loyalty and rewards. To put that into perspective, take United Airlines. Have you all heard of the Mileage Plus loyalty program, right? United's loyalty program is a $24 billion program. I thought it was a cost. The loyalty program and airline combined are a $13 billion business. The airline is negative $10 billion of value. And the secret is that really at the end of the day, they have built a rewards network that drives commerce and spend in their ecosystem. And as a result, they generate essentially like interchange on every dollar spent by United Mileage Plus members, even outside the airline. Right? And this is fascinating because if you think about it, the entire travel market is $100 billion or so a year. Rent alone is $600 billion a year.
Wow.
And there's nothing like that in the market.
So you saw this opportunity, you got to know Barry, you thought about the building, the landlord, connection to the tenant and all the local merchants rewards us. So you didn't build the buildings, you didn't build the merchants, you didn't create rewards, but you stitched all this stuff together, right?
So we said, again, what if paying your rent could earn you points and miles? Imagine every single month you pay $3,000 a month in rent, and you can earn 3,000 miles on your favorite airline or hotel. Every month you pay rent, you build your credit history. Every month you pay rent, you get one step closer to qualifying for a Fannie Freddie FHA mortgage. That today is possible with Bilt. But getting there, it's the simplest ideas that, as all of you know, are the hardest to pull off, right? And what we didn't realize, and I think everybody who's touching financial services today realizes, is that there are so many pieces to the financial ecosystem, right? To enable somebody to pay rent and earn rewards, you have to pull together the real estate companies, all the different payment networks, the banks, the rewards platforms of the airlines, hotels, et cetera. You have to pull together the merchants, and there's 100 people in between. And the complexity of the financial services market is what makes this an opportunity for all of us in this room, right? And so, I think one of the biggest misconceptions of Bilt is people may know about our co-brand credit card.
Are you guys a credit card company? You tired of hearing that?
No, and the answer is we're not, right? In the same way, Delta is not a credit card company for having a Delta Amex, but it generates a lot of revenue, right? And so if you think about today we have over 4 million households across the United States that exclusively use Bilt to collect all rental payments. Okay? That is the largest network of residential properties ever put together in the United States. Every renter pays their rent through Bilt on check, ACH, debit, credit, cash, all of that flows through. Residents earn rewards as part of that. They build their credit history as part of that. And what we realize is that when you start to own the relationship with the resident around the home, not only can you build one of the largest payments platforms in the market, but you can build a commerce in the neighborhood. And so what we spent the last few years building was this network of local merchants, like what American Express did 40 years ago, right? And we brought together local restaurants, coffee shops, grocery stores, dry cleaners to say, what if you could build loyalty with the people in your neighborhood by rewarding them for choosing to spend in the neighborhood at your local restaurant, at your local dry cleaner, right? And so today, if you look at Bilt and your friends who may use Bilt, they earn rewards on rent, they spend in the neighborhood, they earn rewards in the neighborhood, and the properties, the merchants, pay Bilt a percentage of that spend for this additional value created, right? And it's independent of any one credit or debit card, right? And I think that's one thing I just want to cover is to pull this off, you have to figure out a model where everybody wins. And so I think there's a lot of fintech companies here today, right? And the question that you get to ask yourself, if change is so hard in these incumbent markets, whether it's banking or property or any of these services, how do you figure out how your business doesn't only make money for you, but for the incumbents too, right? Because if you can piece that together, you can grow really fast, right? And
Why do you think, just given all these components were there, right, that no one else figured this out before you did?
it's not about figuring out, it's just about being, it's fucking hard. I mean, if I had known how hard this was 5 years ago, I'm not sure we would have done this. It's like, I cannot tell you how many times when we were pitching this idea of a co-brand credit card on the one side, just that piece alone, and said, imagine if you could give people a value prop where they earn points on rent. We have a captive distribution audience with millions of apartments, no different than an airline. This should be a no-brainer. We got turned down by every single bank that I pitched. In fact, I remember in 2019, right before COVID, I thought I had finally got Bread Financial to talk to us. And the week before Christmas, the head guy calls me and says, I am so sorry, I've never had this happen. Our deal team just vetoed the deal. Right? And it is painful. And I remember we sat there for Christmas and we said, so what do we do? Do we keep pitching? Do we try something else? And we said, screw it. And we went out and started pitching debt lenders and just built our own program. And the irony is, within 3 months of doing that, one of the largest banks in the country, Wells Fargo, approached us and gave us a much bigger deal partnership where today, Bilt makes up double-digit percentages of every new card issued by Wells Fargo. We make up one of the largest spend categories for American Express, Visa, and MasterCard because of the rent payments now going through our rails for debit and credit purchases, right? But 5 years ago, no one was willing to take a meeting. And it's just hard. And I think in every moment, like we went in Fintech, I mean, you were in the thick of it. Like, we're here in Vegas, this is like casino central. Like 2017, 2018, 2019 was like casino capitalism for Fintech, right? It was all fake money flying around, and there's goods and there's bads to that. It's great for new stuff coming up. It's really bad for forcing you to create a deep win-win-win model, because you don't have to. When COVID happened, that was the moment that changed everything for Bilt.
Talk about it.
Because for the first time, industries that hate change were willing to come to the table and say, well, okay, what do you have in mind? We need to fill our apartments. We need people to pay rent on time. Airlines were saying, hold on a second, business travel just died overnight. How are we going to kickstart our growth again? And so there's these moments in time. I mean, everyone talks about luck and timing, and you got to have the right idea and the right people and all of that, but the right moment in time and being able to take advantage of that in a timely manner, it solved the hardest part of building a business like Bilt, which is really a network of residential properties, rewards, merchants. It gave us the chance to get everyone at the table at the same time in one moment. Right?
Would you start a consumer direct company today in Fintech, a digital bank?
Well, first of all, I wouldn't start a digital bank, but I would definitely start consumer business. What I love about consumer companies is...
I asked that because on the last thing, people were talking about pluses and minuses of going consumer versus B2B.
Yeah, look, I'm a big believer in consumer. And I think what I love about a consumer business is that if you solve a real problem for customers, you have a chance at winning their business. In B2B, unfortunately, it's not about having the best product or the best solution, right? You have these long-lasting legacy relationships. I mean, you look at our real estate industry, they've been working with these legacy software companies for 40 years that still run on MS-DOS command line. Right? And it's not because new people haven't tried to enter that space. It's because in B2B, winning deals is a different game. I think the challenge with the consumer business is there's so much pressure from VCs, candidly, to jump on the latest bandwagon, and entrepreneurs get pulled into defining like the next hot, now it's like AI for banking or this for that, or if you put LLM in your pitch deck, you might get some more money. I mean, that is the problem. If you just start with what is the problem we're solving for the customer, you actually have a chance at winning as a consumer business, right? And then I think what's powerful is B2B2C distribution. Because that's the other thing that I don't understand why more investors don't ask that question to us and to everybody else, which is, first, do you have a real product solving a real problem? Not what else is hot in the market, but what are you solving? And then what is your distribution strategy? Like if you go back to bread and butter, you build a CPG product, you get distributors to put it on the shelves in markets. You build a digital product, you still want distribution. Right? Bilt went from 0 to 200 million in revenue, 0 to 3 billion in value, not just because we had a good product. It was a good product with the right timing, the right luck, and a lot of distribution. Right? We had millions of apartments that we partnered with to distribute this platform. We partnered with the payment networks to distribute this platform. And I think that is such a powerful tool. And by the way, a lot of the fintechs here today, like we have become a distribution partner for, which is so much fun. Like we did this really cool partnership with Method Finance, and we together created a way to instantly link your debit and credit cards without having to go through signing in and all this stuff to facilitate a seamless checkout. You sign up, you move into your apartment building, and without having to log in and do everything, you can pull your cards, validate the CVV, load it in, and be ready to start your checkout. Right? And now we're distributing that product to millions of customers. We work with Prove to distribute their product. We work with Alloy to distribute their product. We just partnered with a company called Knock, which may be here, to help distribute a new solution to make it easy for people to link their cards to all their different merchants. Right? Like this is the fun of building an ecosystem together. And given how hard change is, if you have a good product and we together as a fintech industry can team up, right, you can start to really create awesome win-win-wins rather than having to compete with each other.
All right, so we know Bilt's amazing. Bilt's going to be huge. But talk to us about, you and I have a lot of funny conversations about VCs and founders and relationships with VCs and who adds value and who's doing what and how do you build a board. Riff on that for us for a second, because you got a lot of thoughts.
I think Steve wants me to get in a lot of trouble.
Why not?
I think you have to assume that in any market, this headphone thing keeps falling off my ear. In any market, you have to look at the alignment of incentives. If you were an entrepreneur today, the question is, when you raise money, who do you raise it from? And I would say you should do everything in your power to only raise money from either commercial partners, right, or kind of individuals that can become part of your team, right?
Or people you feel like can add value, even VCs if they're really truly got a partner that's going to add value.
But that's not a thing. So, like,
I try to give them a layup.
the reality is there is a misalignment of incentives between venture capitalists and entrepreneurs. There is an alignment of incentives between LPs and entrepreneurs. LPs want long-term, stable capital that they can bet for 10, 20 years behind your vision. Entrepreneurs, it's a one-of-one game. You're putting everything in your life behind this one company. Failure is not an option, right? In a venture capital portfolio, their job is to make enough bets and hope one succeeds, and any time spent on the one struggling, it's not a smart ROI. Like, if you're a smart venture capitalist, it is not smart to spend time actually helping entrepreneurs. It's your job to get in the deal and then move, right?
We're seeing a lot of that.
And so I think knowing that, it's not, they say don't hate the player, hate the game. That's just the reality of the alignment of incentives. And so, we were so lucky. I tell you, we would not have been able to create this company. Our initial capital, we were so lucky, was all institutional pension money and strategic real estate partners. And that allowed us to take 3 years to build this infrastructure of all these partnerships. We didn't race to market. We were able to figure out the unit economics before we went and tried to just blow money at scale to get a markup round, to do the next thing. But if we had done it the other way, like my first company, where we took a bunch of venture capital money, you immediately run a race to get the metrics for the next round. But that target is a moving target because venture capital, like, focus is whatever the hottest new buzzword was. In 1 second, it was about app growth. The next second, it's about profitability. The next second, it's about AI, right? And so it's a moving target. But when you have the right long-term strategic capital, like our real estate owners who are our investors, right? Half of the 100 largest real estate companies in the country are both partners and investors in Bilt, right? Not only does that give us a unique competitive mode, but their incentive is actually more aligned with our product success than any markup. They don't care about a markup. They care about me delivering the best product for them. The pensions don't really care about a markup. They care about, in over 10 years, am I able to return real capital back to their endowments or their pensions to take care of the people that they're assigned to take care of. And so it's so important to get that alignment of incentives right. And as you know, by the way, because when we did this last round, we were so lucky. It was the first time in my life I got to bring on a partner who had such incredible industry knowledge, who would work with us today. But Ken Chenault, who ran American Express for 20 years as a CEO, joined Bilt recently as our executive chairman, and he has been the best partner I could have asked for. I mean, in the 1980s, the story of how they created membership rewards and created a merchant ecosystem and do all this, we're doing that today. Now, that required us to take General Catalyst capital as part of that, but we were very disciplined about saying, even then, your board seat is only Ken.
Amazing. And he's been great for you.
Phenomenal. So I think just being disciplined. We're all in this. It's a super, super hard battle that we have to deal with every single day to build a company. Nobody can appreciate how difficult it is. But I think the opportunity, if there's any takeaways, it's solve a really big consumer problem, build distribution, figure out the win-win-wins with the legacy players, right? And make sure that everyone's incentives are aligned end to end, from your cap table to your partnerships to the way that you align your value to the customer, and the value you create for the consumers. And if we keep doing that, hopefully, we have a long way to go as well. So.
Win, win, win. Thank you, everybody. I think we're out of time.
Thanks for having us.
Thanks.